Alright, good afternoon everyone. Today is Wednesday, March 21st, 2012. Let's see, where do I start? Let me start with the trial. If you haven't taken the CFRN trial yet, go to www.cfrn.net/apply. That's APPLY. Okay, www.cfrn.net/apply. And you can take our trial. You get 5 business days in the live trading room, and you get to see us trade live and see all the stuff that I'm about to talk to here and all the stuff that's in all the recaps that are out on the website. If you haven't gone out to the website to see the recaps, there's a link to them on every page of the website. Along with that, there's a link to the toolbar. You should download the toolbar because it's got all kinds of cool stuff on it. And also there is a link to the blog on every page. So you can read the blog nightly, download the toolbar so it'll be easy to get to all of our CFRN stuff and a whole bunch of other things that are there for you. And take the free trial at www.cfrn.net/apply. Alright, now let's get into the trades. I'll start off with the results. We ended the morning break even everywhere but the Russell. With the Russell we ended plus 14 ticks on the morning. Okay. We didn't take any trades on the YM. We took one trade on the ES that we got a break even on. It actually slipped us 1 tick, but we ended up, we went for a break even on that trade. And we took one trade on the 6E that we ended up taking a break even on once it moved, it moved 5 or 6 ticks into our direction. I'll show you the 6E one first. Okay. We shorted right here on the 6E at 32.04. Alright, it dropped down here to 31.98, so it went 6 ticks in our favor. Our target was 8, and it pulled back up here and it stopped us out. Okay, at 32.04. It continued down from 32.04. It dropped all the way down to 31.85, so it went almost 20 ticks, went 19 ticks in our favor, which is just under 5 points before it pulled back again. That was pretty much it on the 6E this morning. One thing worth noting was when we broke the elbow to the downside here, the white was leading the green, suggesting the first pullback to the BBC would hold. The first pullback was way over here, but it did hold, and it pushed down pretty hard from there. Right here, same thing. White is leading the green when it broke the elbow, so the first pullback to the BBC should hold. Okay, that's on the Euro. The 6EM2. Okay. Now let's show the Russell. Not the Russell. I'm gonna spend some time on the Russell, but I'm gonna start here with the other markets that I actually place trades on. Here's the ES 4-tick range. All right, right in here on the 4-tick range, price dropped down to 13.96, which Dwayne pointed out is held all week. This weekly trading zone right here is held all week. It dropped down there, bounced up to the BBC. We entered short here at 13.98. Okay, we were short at 13.98. Price moved in our favor, but then everything started to turn around and look like it wasn't going to go in our favor, so we moved our stop to break even and we got out there. Okay, it pulled back against us all the way up here to 13.99.75. Our risk was at 1400, and then it dropped down to our profit target. Okay, price turned around here and the BBC never got outside the box again. So we didn't have any more opportunities on the ES 4-tick range. Now on the ES 10,000 contract, this one was pre-market. I pointed this out pre-market. Everything was dropping down. It pulled back up to the BBC. The first pullback to the BBC after the bullish or bearish cross of the MA1 is what we look for. Right there was the spot. Okay. We didn't have anything right in here. Okay. We weren't going to trade here, going down into the weekly trading zone. Right here we had a bullish cross with a pullback down to the BBC. The cycle's in favor of the trade, and it moved right up to the resistance up there. Okay, so that was a nice trade right there. That was available to anyone who wanted to trade that. That was during our break, okay, but it was there for anyone who wanted to trade it. Now, any of our partners who have the indicators, or anyone who's on trial who had the indicators, understands the setups. Okay, the 2100 had the same setups, same spots. Okay, this is the 2100 tick. Oops. Same setup, same spots. Alright. Now, we'll jump over here to the YM. I didn't take any trades over here on these two ES charts. I had taken just the one trade over here on this ES chart. Alright. Now, we're getting a fresh bubble over here on the 4-tick range. For those of you guys who like to trade the 4-tick range, we're getting a fresh bubble. We have a higher swing pivot. The BBC is about to get outside the box, suggesting a long trade right here. We even have bullish divergence to go with it. Alright, let's look at the YM. Now, the YM, right in here, it didn't pull all the way back up to the BBC. This was right at the open. You would have had to have been really aggressive to get into that. But right there was the bearish cross, first pull back up toward the BBC. It didn't actually hit it till over here. And we didn't take this because we had a little gap right here. The market just ran up right here for some reason, and I didn't know why. Bernanke was testifying at the time, too, so we kind of let the YM go right there. Had we taken it with 20 points risk on it, or let's just see, the entry would have been here at 11.15, we'll say. You would have needed about 10, anyway, 10 ticks risk. It worked out just fine. Now we had a bearish cross right here, and it pulled back up to the BBC again, but it was going right into the weekly trading zone. We did not take this. All right. It did it again over here. This was the first pullback, and price dropped down here. This is the one, Robert, this is the one that you took. It went down to the MA1 right here, closed the window of opportunity to the MA1. It popped back up, went down a little ways, and then it had a pretty big run, as you can see. Right here, after the bullish cross, it pulled back down to the BBC. This is the first pullback to the BBC, and this happened during our break. Okay, pulled back to the BBC and went right up to the weekly trading zone. Okay, I wanted to point out some things here that were working in conjunction with those trades. This is the 4-tick range, and I'm looking at double divergence down here. Okay, now we can scroll back here. Let me spread it out a little bit so you see a little more of it at once. Okay, the first incidence of double divergence was right in here, but we weren't looking for anything long right in here. Okay, this is bullish divergence, bullish double divergence right here. It's a little easier to see when it's not spread out so much. Right here. Okay, price actually dropped down, and we had divergence in the opposite direction right here. Okay, you see this? We had divergence between here and here. And price pulled back up to the BBC and fell off of it. All right, it did it again, right in here, again, right in here. Then we lost the divergence on the bottom one down here. All right, then price started to move in the other direction. Right here, we had a little bit of bullish divergence going on right here. Okay, this was the pullback after the bullish divergence. We still had bullish divergence right here, so there was a possibility that right in here you could have thought about going long. All right, we didn't really have a bunch of divergence. We didn't really have a bunch of divergence until over here. Okay, and price dragged all the way over here. It dropped down again, went down, and we had double bearish divergence right here. You see I have an arrow right here. We didn't actually have divergence on the top one. It just looked like it was moving down right there. Off the BBC, closed down below the MA1. Same thing over here, closed down below the MA1. Double divergence right here, same thing again. Over here we had bullish divergence, suggesting a move up. Right here again, bullish divergence, and again, right here. All right, now this is the 4-tick range. This is the 4-tick range. YM. All right. So those were all happening, most of them in conjunction with these trades that were over here on the 500 contract. Okay, they were all happening at about pretty close to the same time. There was more opportunity on the 4-tick range, as there would be, since it's a faster time frame. All right, now let me organize my desktop a little bit. So we've done the ES, the YM, and the 6E so far. Let me grab the Russell. Now, we took a lot of trades on the Russell this morning. I'm going to put this one over here, and we'll refer to this one from time to time, but the one that I really want to point out is this one. All right. Let me just take a look at who is in here. Give me just a second, guys. I'm just going down this list of folks who are in this room who are not partners yet. All right. Here we go. All the yellow ones are trades that I actually took this morning. Okay. I took a long trade right here. I took a short trade here that I took a break even on. Now wait, there were a couple of trades that I took earlier on. Here we go. There were a couple of trades that I took earlier on. I took this short trade right here. I lost 6 ticks on it. And there was another one that I had taken where I lost something. I lost 4 ticks, I think. I was down 10 ticks. Okay, from the morning. And I shouldn't skip right by all this. Let me just skip to the trades that I took, okay? There's plenty of them there, so I'll just point out the ones that I took. This green line right here that you see going up and down, partners, you'll find out more about that tomorrow night in the partners meeting. Those of you who are not partners, you won't know anything about it. But anyway, as we crossed up right here, well, active partners, okay, active partners who will be in the partners meeting tomorrow night. If you're not an active partner, then you're not going to be in the partners meeting tomorrow night. You're going to have to find out about it through this, through the recaps and stuff as we develop them over the coming weeks. Right here, we closed up above right here. We took a long trade for 10 ticks. Over here, we took a short trade. We got a break even on this trade. We moved our stop down to break even. On this trade right here, let me bring, it's at 10:35. Let me slide this one over right here to 10:35 so you can watch my cursor. You see we had double divergence bullish over here at the time, and we had it right here as well. So in this one, on this long trade here, everything was going up, and we had double divergence over here saying it was really going to go. Over here on this short trade, it was saying it might go. Now, a better entry on the short trade would have been over here, but I actually entered pretty low on that, I think, right over here, and I got a break even on it. I got break even. I took break even once I saw that we had the bullish double divergence over here. Okay, so price moved up from there, and up here there was an opportunity on the short side. It dropped down. I didn't take that one. Over here there was a long trade. I did take this long trade right here for a few ticks. Then it turned around, gave us a short opportunity. I took that for some ticks. I don't think I got the full 10 on that, but I did get something. Right here it moved up. I didn't take that. It moved back down. I didn't take that. There was nothing in here. I didn't take anything right in here or on the long side. Right over here I did take a short trade. Now the better entry on the short would have been up here. I entered down here. Had I entered up here where the better entry was, I would have probably had my stop at break even, but as it was, I lost a full 8 ticks. Actually, I think I lost 10 ticks because I put my stop up above right here. So I lost 10 ticks on that. I made it back a couple minutes later, right here, or actually less than a minute later. I made it back right here. Now let me scroll over here so you can see the double divergences over here. When these double divergences line up with trades that I'm taking over here, those trades tend to work out very nicely. All right. Let's look at this. This was at 10:53. See, that was this trade right over here when I went short right here. You see where my cursor is on the right, on the chart on the right. There's a double divergence over there. Look over there on the chart on the right. You can see that there's a double divergence. Here, I'll do this and come over here. You can see right here there's double divergence right there. All right, when I took this short trade, and that worked out very quickly. This one over here, we did not have the double divergence there, I don't believe. We didn't. There was this opportunity right here. If you look over here on the right, we did have the double divergence there. I didn't take that trade, however. I was preoccupied, apparently. There was a short trade right here that I took for a few ticks. That had given about 8, I think, 8 or 9, and I moved my stop up to +4. Price reversed and went up. And right here we're into the break period, okay? But there was an opportunity right here to short, an opportunity right in here to go long. Okay, I think right over here to go long, though this right here didn't agree with that. This said short. And, well, that's pretty much it right now. Okay? That was the Russell. Now let me just show you the double divergences over here on the Russell. Okay? From the open. Alright, here was one right here. Double divergence, bounced off the BBC and moved up. It bounced off the BBC and moved up again right here. We didn't have as much divergence there, but we did have some. Alright, right here, the move down. Right here again, a move down. right over here for the move up, right here again for the move up, again right here for the move up, and over here for the move down, right here again for the move down, though this one didn't go quite as far. That one only went 7 down to 0, so that's still $70 a tick. $70 a contract, sorry. Then closing in here on the end of the morning session, there was right there for the move up, again right here. If you got in here and you got out, say up here, there was another opportunity right in here or right here if you wanted to, with the double divergence on the long side. Okay, over here on the short side, we never closed down below the MA1. Over here we have the double divergence again on the long side, and it's bouncing off the BBC. So a close up above the MA1 right in here should work out pretty well. Okay, and that was the morning session. All right. Robert said he had another good 2100 tick trade. That's good. And I don't see any other questions in there, so I am going to wrap up the recording here. And if you guys have any questions, feel free to type them in. Just a note for all the partners, tomorrow night, partners meeting, 9 p.m. Eastern Time. So we will be going over, well, I will be going over a whole bunch of things tomorrow night. I'm sure there'll be a bunch of questions about this, and I may even put something new together in the store for the partners tomorrow night. I'll probably only make it available during the partners meeting, so you guys will probably want to be out there for that partners meeting if you can. All right, just so you guys can take a look at some things. If you're on the trial, if you're on the free trial, and you want to become a partner, send an email to support@cfrn.net. All right, support@cfrn.net. And if you don't already have the information you need to become a partner, I will send you the information that you need. All right, everybody that was on trial, I believe as of Tuesday, maybe Monday. I think everybody that was on trial as of Monday should have an email. If you didn't get an email from me, look in your junk folder. It would have been coming from tech@cfrn.net. All right. All right, that's it. I'm going to wrap it up.